Income tax deductions on life insurance premium, an employee's contribution towards EPF, Employee Provident Fund, PPF, Public Provident Fund, children's tuition fees, pension plans, principal repayment on home loans and a host of other investment options are covered under Section 80C of the Income Tax Act. Many taxpayers exhaust the 1.5 lakh rupee tax deduction limit under Section 80C. Additional investment in the various options will not provide further tax benefits. Here are some of the sections under income tax laws, apart from Section 80C, that help in cutting down the income tax burden. 1. NPS additional income tax deduction of 50,000 rupees is allowed for contribution to the National Pension Scheme, NPS, under Section 80C(d). This extra deduction of 50,000 rupees on NPS increases the total deduction allowed under Section 80C and 80C(d) to 2 lakh rupees. 2. NPS contribution routed through employer under the NPS corporate model. An employee can deposit the contribution directly or route the contribution through the employer he or she is working with. Employer's contribution to NPS up to 10% of basic salary, plus DA, is allowed deduction under Section 80C(d). 2. There is no cap for this deduction, but the total deduction claimed for contribution by the employer should not exceed 10% of the salary. 3. Deduction of interest on housing loan under Section 24B of the Income Tax Act. Interest paid up to 2 lakh rupees on housing loan is allowed as deduction from taxable income. On rented properties, the borrower can only claim deduction of up to 2 lakh rupees per year after adjusting for the rental income, and the amount above 2 lakh rupees can be carried forward for 8 assessment years. 4. Deduction under Section 80E. Under Section 80E(1), an additional deduction of 50,000 rupees is available over and above the limit of Section 24B on interest paid on home loans if the person is buying a house for the first time. The person must not own any other residential property on the date of sanction of loan. 5. Deduction under Section 80D. An individual can claim deduction of up to 25,000 rupees if he or she is below 60 years of age, and 30,000 rupees if above 60 years of age, towards medical insurance premium paid for self, spouse and children. Additional deduction of 25,000 rupees is available if one has bought medical insurance for his parents. This deduction can go up to 30,000 rupees if parents are above the age of 60. 6. Deduction under Section 80A. Taxpayer can claim deduction for interest paid on education loan for him, spouse or children. There is no upper limit on the amount of deduction. 7. Deduction under Section 80D. If an individual has dependents who are differently abled, he or she can claim deductions up to 75,000 rupees for expenses on their maintenance and medical treatment under this section. This deduction can increase to 1.25 lakh rupees in case of severe disability. 8. Deduction under Section 80D(b). An individual can claim deduction of up to 40,000 rupees for treatment of certain diseases for self and dependents. The deduction can go up to 60,000 rupees if the taxpayer is above 60 years and up to 80,000 rupees if above 80 years. 9. Section 80GG. If you don't receive HRA from employer and make payments towards rent, you can claim deduction under Section 80GG towards rent that you pay. The deduction is lowest of the following: A. 5,000 rupees per month, or B. 25% of total income, C. Rent paid less 10% of income. 10. Section 80G. Donations to charity. Donations to charitable organizations are entitled to up to either 50% or 100% deduction, but the highest deduction allowed is capped at 10% of the donor's total income. Don't forget to subscribe our channel for latest updates.